Peace, power, and prosperity, family. You already know what time it is. The Bitcoin Block Bully coming to you once again after a nice little hiatus with a fresh episode of Coffee and Crypto with the Bitcoin Block Bully. This is the early bird edition as it is just now going on 7 a.m. Chicago time. What I will be doing also is setting up a Facebook Live, which should be coming in live now. It is kind of early, so I am going to share this out on my major social media platforms. Let me get this up and going real quick. And I do want to thank any and everybody that does tune in this rising, especially on short notice. So let me see. I know they've been playing around with Facebook a little bit lately. So let me see how they've rearranged everything for me to go live real quick. Let's see. Let me just get this set up. Also, let me get this shared out. And I will be recording today New Money Matrix podcast, which is available on both Spotify, iTunes. So you can definitely check it out there for those that are interested. So get that up and open. Share this out to the people. As we can see, it is a green day today for the most part. Altcoins are running pretty hard right now. Link taking the cake out of the bunch. Link just take hey, doing what crypto does at the end of the day. Let me see. Let me get the screen share going. Title typed in. There we go. And let me go ahead and press play, or go live rather. And we should be filming live. Peace, power, and prosperity to the family out there in Facebook world. How we doing out there? You already know what time it is. The Bitcoin Block Bully coming to you once again with an early bird edition of Coffee and Crypto. I know it's been a while. Let me see. Are we? Okay, cool. Now we may be live. Or we may have been live already. But anyways, grand rising to the multitude out there, those that are tuning in Facebook land as well as YouTube world. It's exactly what's going on. Peace, 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 King. What's the word? Let me get this shared out real quick. Got a couple of stories I'm gonna bring. It's gonna be quick. I do got a consultation coming up, so it is gonna be quick. Or coaching session, should I say? Let me get this shared out on social media platforms. There we go. And I will be recording this on the New Money Matrix podcast as well. There we go. All right, cool. We do have it shared out. Let me check back over here. Peace, power, and prosperity, family. How we doing? So I'm gonna go ahead and dive right into it. First thing we're gonna be taking a look at. Now, other alts are suffering right now, down in the negative. ZRX, KNC, Crow, SNX, USDC, Maker, just to name a few, XMR, Bitcoin Cash, and BSV. Sadly, the Bitcoin forks aren't faring as well as the original Bitcoin, but we are seeing volume coming in. What we're going to focus on first and foremost are a couple of stories. First one coming in from Cointelegraph. Get that set. Let me give a couple more minutes for individuals to tune in. Let me get a couple more minutes. As I say, I know it is early, got a long day ahead of me. So I'm gonna give people, what time is it? 7:06. What we'll do is we'll go till 7:10, and then we'll get the story started up. What I am going to do now is get my podcast set, or get set to record the podcast, should I say. Get me a new episode ready. Peace, power, and prosperity, family. How we doing out there? You already know what time it is. It's the Bitcoin Block Bully, and this is actually my third introduction. First being YouTube, second Facebook, and now we're coming in New Money Matrix podcast, which is recorded for those listeners that will be tuning in via iTunes, Spotify, or Anchor, or whatever type of streaming platform that has outsourced this information. I know it's been a while since I've dropped a video and or podcast. Been working a lot. The space, nonetheless, has been growing, and I have been trying to keep individuals abreast with the information through the use of mainly my IG page, which directly connects to the Facebook, which gives out information that if you just do the due diligence and research it a little bit deeper, it'll take you down the right rabbit hole. So we will be kicking this off first and foremost with a story coming from Cointelegraph, enabled stock, greed, and exuberance. 5 things to watch in Bitcoin this week. It goes on to state, what time is it? Wow, it's only been a minute. We said we was gonna wait till 7:10. It felt like that was 5 minutes ago. Okay, going on 7:08. Let me see what the crowd's like before we go ahead and take off. Peace, guys. How we doing over there? If everybody's starting to come in, grand rising to the multitude. I want to thank those that are tuning in right now. Mr. D. Duncan, how we doing? Grand rising, God. I want to say peace to the kings and queens that'll be tuning in today, gods and goddesses. And what I think, let me see. Yeah, we got about 10 people tuning in right now, so I'm not going to keep everybody waiting. What we'll do is go forward with the first story. Once again, coming from Cointelegraph, entitled "Stocks, Greed, and Exuberance: 5 Things to Watch in Bitcoin this Week." Bitcoin price remains stable above 9K, as data increasingly points to irrationally optimistic behavior on correlated stock markets. And for those that may not be too savvy with the wordplay that they're utilizing, basically saying that the irrational, meaning that it's what's going on in the stock market right now is kind of crazy. And in my opinion, is only being induced by the unlimited printing of the Federal Reserve. It's not that they are valued at these prices or there's so much value behind investing in them right now. In my opinion, is that a lot of money is being put out there for individuals to really do what they want, and the majority of it from big companies are being put and pumping the prices of stocks up. Do I think it can sustain like this? No, I don't. Not me personally. But that's neither here nor there. Let me put this out there first and foremost as a short disclaimer. I'm not a financial advisor in any way, shape, or form. I'm not a financial advisor in any way, shape, or form. I cannot give you financial advice. I'm not a tax advisor in any way, shape, or form. I cannot, and I will not give you any type of tax advice. I'm just a dude who is interested in cryptocurrency and likes to share the information with everybody else. That being said, don't take anything I say as any type of financial advice. This is for entertainment and or educational purposes only. Now, the story goes on to state, BTC begins Monday by avoiding another test of the 9K. But what could happen to change the mood or even set off a bull run? Cointelegraph took a look at 5 major facts that could influence the BTC price during the coming week. Number 1, stocks are under pressure. Does valuation matter? The macro outlook seemed more or less stable on Monday. Prior to trading, futures for the Dow Jones, S&P 500, and more were modestly up, despite concerns mounting over coronavirus. Specifically, one source quoted by Bloomberg warned on Sunday the sentiment is one of worry, both about the spread of cases and the United States' response to protect the economy. If the Federal Reserve intervenes in equities yet again and adds to its balance sheet, it would increase the sense of an artificial presence in the markets, on the markets in terms of competition. This is an emerging possibility that the Fed has. That this is an emerging possibility that the Fed hasn't gone far enough. Quantitative statistics at Stanford C. Bernstein wrote in a note. If that came to pass, then maybe valuation of market simply doesn't matter. And basically, what they're saying is that right now we're seeing things that have never been done, whereas the Federal Reserve itself is buying up bonds, and a number of other financial instruments that would, in some light, in another time and day, may be looked at as not correct. We'll say that. Before he goes on to state, as Cointelegraph reported, Bitcoin has shown no signs of lessening its dependence on stock in recent weeks. Moves up or down appear to shape BTC USD performance, with last week's trip from 9K to almost 95 and back down again with no exception. Analysts particularly eye the S&P 500, an index with which Bitcoin currently shows a 95% correlation. And what they mean by that is that the chart of the S&P 500 resembles the chart of Bitcoin to a 95% match. Coronavirus is also weighing on U.S. consumer confidence. Fresh data, meanwhile, shows with 5 indicators all flashing bearish in July after recovering during the 2 previous months. Then you got a tale of 2 fear and greed indices. On the topic of macro, which means the larger picture, trader sentiment in cryptocurrency still contrasts with that of traditional market. That was the conclusion from 2 incarnations of the Greed and Fear Index, a basket of factors designed to show whether traders are overly risk-off or unduly confident. The Crypto Fear and Greed Index remains in the fear category, meaning that people are fearful right now, with little movement for several weeks. By contrast, the traditional market equivalent is flashing greed, while slowly trending downwards towards neutral. On a scale of 1 to 100, Monday scored 59, down 7 points from the same time 1 month ago. The cryptocurrency equivalent measured 43 for Monday and 38 last month. Fueling traditional greed was extreme greed and stock price breath, while derivatives put and call options for those who trade options, along with safe haven demand, also sat firmly in the greed range. Then you have the cash gold inflows beat stocks in 2020. The greed narrative fits with other signs that stocks, in particular, are overly buoyant. As noted by market commentator Holger Zakopitz on Monday, the correlation between the NASDAQ and the S&P 500 is on the up, in what he describes as a sign of exuberance. At the time, the banks were gearing up for a dismal quarterly performance, something that is on track to be the worst since the 2008 final crisis. Y'all need to listen to this. As Cointelegraph noted, misgivings about stocks' recovery since March have long persisted in Bitcoin circles. The Fed interventions in particular have fueled accusations that the entire atmosphere is now artificial and true value is of limited relevance. I will tell you all one thing. For those that may invest in physical assets such as gold and or silver, you may want to start looking on such platforms as AppMex, JM Bullion, SD Bullion, and see how much of the gold and silver is actually out of stock. There's a quite a difference. I think the other day it was like over 2,500 pieces of silver out of stock. Only what was it, 500 or 700 available. Need to pay attention to this. The fact that they are taking the coinage, sucking the coinage out of the system, out of the American or the United States citizens' hands. Need to pay attention to what's going on. But moving forward, you definitely want to check out not just cryptos. And once again, not financial advice in any way, shape, or form. But my focuses are on gold, silver, land, and crypto. Moving right along, it goes on to state that numbers this week, things that have actual value. Numbers this week show, in my opinion, humble opinion, numbers this week show that investors themselves have in fact gone for cash and gold, not equities, in 2020. Inflows into the two assets beat others since the start of the year, since similar to 2008, 2009. Bitcoin fundamentals stay strong though. Monday sees a new Bitcoin difficulty adjustment, the latest in a series of bullish moves that underline miner confidence. With the event just hours away at press time, estimates suggest a difficulty uptick of around 9.5%. This is much stronger than the previous move 2 weeks ago, which is stagnant on the way to matching the last month's 15% surge, which was the largest since early 2018. Difficulty represents how much effort is required to solve equations when mining new Bitcoin blocks. Upward adjustments suggest more competition, with Monday's estimates slowly increasing over the past week. At the same time, the network hash rate, having reached an all-time average high last week, has trailed off slightly. Data from blockchain estimates a 7D average of 124.42 EH, which if Brother Boyd, one of them in here, they can explain this a lot more. But basically, it has to do with the miners. Let me see. Warnings remain over derivatives. I do want to speed this up as I am limited on time. Bitcoin futures market generated few opportunities for price movements over the week. Low volatility means that markets will begin Monday in a similar position to that of which they ended on Friday. If Monday and Friday do not match, a gap opens up in futures markets, which the BTC USD spot tends to fill subsequent days or even hours. Meaning that what happens is that when you have derivatives being traded that close on a Friday and open back up on a Monday, usually UTC time, pay attention to that. What you'll see is weekend price action will do something while the weekday price action is stagnant. So that when it opens, if spot price has not gotten back to where the original weekday or derivative market closed at, there's going to be a gap either to the upside or the downside, to which it usually fills after a certain amount of time. Let me see what else we have. Nonetheless, futures remain a source of suspicion for some. As Cointelegraph reported, in-house analyst Bill warned last week that weak performance could be a sign of worse to come. Specifically, one indicator showed uncanny similarities to the days before Bitcoin's March crash. Should history repeat itself, he added the drop, however, should not be as intense as at that. In my humble opinion, I'm looking for prices to come down from where they're currently at if we're not able to sustain, break, hold, and sustain above certain resistance levels. We may have time to take a look at that. Moving right along, coming from Forbes now, stating that DeFi boom has saved Bitcoin from plummeting. Let's see what they're talking about here. And by a show of hands or 100s, a thumbs up or whatever the case may be, for those that are able to be present today for this viewing, who out there is part and partial to the DeFi decentralized space. Also, family, if you can, please help and assist me in getting people this information. Please share this out. Please share this out if you can. Brother Cruz, what's going on? Miss Kathy, Brother Hill, Brother Ali, Brother Threat, Brother Duncan. Grand Rising to those tuning in from Facebook. Tag your friends if you can. In fact, let me take this off of, let me see if this is on. It is. Let me take this, let me put this on public. That way. There we go. Now anybody can see this video on Facebook. It's on public. Brother Boogie, Brother Kennedy, what's going on? Zigzag, Pluto walking. Grand Rising to the multitude. But moving right along, for those that aren't familiar with what DeFi is, it stands for decentralized finances. But decentralized financing, whereas you are able to handle the same commercial affairs that a financial institution would do on your behalf in the traditional sense. The story goes on to state, as noted in prior publications, Bitcoin has disappointed many onlookers with muted price action, post-halving, for which multiple narratives have taken blame. And I do remember getting a lot of calls around the halving time asking, was it time to buy? Is this it? They're saying Bitcoin is going to go back to straight FUD, in my opinion, which is fear. uncertain. No, not FUD. FOMO, the fear of missing out. Individuals basically saying that the halving's here and it should make Bitcoin go up to 20, 30, 40, 50,000. Now, do I think Bitcoin at one day is going to go up to 20, 30, 40, 50,000? Yes, I do, which is one reason why I invested. Do I try to put a time on that? Nope. I just play it by levels. But anyways, it goes on to state, despite the aforementioned finger pointing, and no analyst has suggested the Bitcoin price could be much lower without one large phenomenon occurring over the past 3 months, which is the DeFi explosion. DeFi, also known as decentralized finance, comes in many forms, including lending, derivatives, exchanges, and payments. The nascency and excitement around this space makes new protocol tokens susceptible to boom and bust cycles, meaning pump and dump. The most recent boom cycle is around liquidity mining. Liquidity mining is an incentive program set up by new DeFi protocols to attract users, i.e., liquidity. These programs typically distribute so-called governance tokens to these liquidity providers, commonly known as yield farms. So what we have going on here is that you have, I'll try to put it in more understandable. Let's say that you have a liquidity pool for the investments of real estate, meaning that you are an individual that sits on a certain amount of wealth or funds or capital that you may not be doing anything with, and there is a fund set up that you are able to provide liquidity for that then gets utilized in some way, shape, or form, and then you receive a return on that liquidity that you offered up for offering it up to the liquidity pool. And what they have going on in the DeFi space is essentially initially the same thing, but they call it yield farming because you're farming different yields on different assets, different digital assets. It's an interesting aspect for those that are able to grasp the concept and get in it. A lot of us have been doing it for a while, maybe not actually understanding that you were doing it. For those that have been utilizing Compound, TokenStack, InstaDApp, SNX, proof of stake currency, stable coins, utilizing the collateralization and then the interest bearing coming from it. Also, even taking out loans, gaining comp token, a number of different. Though not new, DeFi incentive programs are cleverly orchestrated growth hacks, which have resulted in incredible spikes in network participation, total value locked, and market cap of governance tokens. When they say hacks in this space, it doesn't always mean something has been hacked. When they create platforms or protocols, especially those coming into the space new as almost babies, they call them DeFi hacks. You understand what I mean? The most prominent example being Compound, a decentralized lending protocol that allows users to borrow and lend from the pool of assets without permission. Per Delphi Digital and DeFi posts, Compound saw its value locked and market cap skyrocket once liquidity mining and governance tokens comp distribution began. Which, for those that have been taking any type of webinars for the past year almost, and you are utilizing Compound and or InstaDApp, you do have comp token, whether you know it or not. You are accumulating comp token, which is yours for free. And is distributed to you for the deposit, more so for the withdrawal also, and borrowing of specifically USDT, basic attention token, and a number of other digital assets. But it goes on to state that once the distribution began, currently sitting at 668 million and 497 million respectively. On the surface, liquidity mining has little correlation to Bitcoin price movement, but a deeper look reveals the connection. In order for yield farmers to receive governance tokens as compensation, they must participate in the network as either a borrower or a lender, which requires a deposit into a pool that borrowers can withdraw from provided they post sufficient collateral, and allows users to earn above market interest rates on their holdings, plus capital gains from comp token appreciation. I'm gonna tell you something. I was thinking about the music industry. And I was seeing that there was a big influx of individual, I guess, larger artists starting to sign smaller artists, though they may not be putting out hits, music, sitting on the shelf or whatever. And I started looking at it from a collateralization aspect. Whereas, what if through the use of me signing this artist, I am using him as a surety and I am using it as collateral and withdrawing or being able to take out a loan against or make interest on holding this artist as collateral, whether he puts out music or not. You understand what I mean? I get you to sign on the dotted paper. I'm able to lock that in, your signature as value, and now I'm able to withdraw assets or capital from that value. Just something I was thinking about last night. Put some more thought to it, but back on track with the crypto aspect. It goes on to state the largest amount of value locked in DeFi. Hold on. Largest amount of value locked in DeFi comes from Ethereum tokens. 715 million at the time of writing, followed by Bitcoin at 141 million. Additionally, Sanaya Moore notes one of the hottest tokens on Ethereum right now is WBTC or WRAP BTC, an ERC20 token, which I did a podcast on almost a year and a half ago, backed 1-to-1 by Bitcoin because of a massive rush by yield farmers to buy WBTC in order to participate in the compound network, thus earn comp governance. And what you want to look at WBTC is almost as a certificate of ownership, or when you had gold and silver certificates, whereas these certificates actually represented the back asset that was held, in a institution. Whereas in this aspect, each WBTC is actually a certificate derivative or a certificate of ownership that you could take onto the Ethereum blockchain and actually perform as if you actually were holding Bitcoin, but you're not. You understand what I mean? But this certificate, which represents Bitcoin, I'm able to operate it over here as if I did have Bitcoin. And I'm understanding it from a different world of studies. Combining both value locked up by BTC and WBTC to make sure everything's still coming in. Family, if you can, please let me know if I'm still coming in clearly. Let me know if I'm still coming in clearly. Let me know if I'm still coming in clearly. Okay. Where'd I leave off at? Combining both value locked up by yada, yada, yada. The last impressive participation in price growth seen within the DeFi space over the last few months has coincided with or helped enable alt season, aptly dubbed for alternative small cap coins rapidly increasing in price. The majority of altcoins trade on BTC pairs, which means any new speculators entering the space will need to acquire Bitcoin first before trading. In essence, providing a subtle undercurrent of buying support for Bitcoin. For all positives, DeFi has brought Bitcoin over the past 90 days. It also offers several risks. For example, the crypto market is highly reflexive, meaning that some sentiment that drove value locked up and priced to unprecedented heights will inevitably reverse, potentially spilling over on the Bitcoin. Likely reversal catalysts are code exploits within decentralized protocols, commonly seen over the years, or an abrupt end to alt season. I'm gonna be honest with you. I am seeing a lot of FOMO. Now I'm getting myself prepared for a big drop, in my opinion. Now, can you see prices continue to rise? Yes, you can. But I wouldn't bet the money, the whole house on it, of this continuation. How this particular chapter of irrational exuberance ends, it is too early to tell, but Bitcoin will likely not be immune. Notice the use of notice a pattern of certain things that may occur, whether it's numbers, words. You don't just see the word exuberance thrown around like that. Just something I picked up on being a critical reader. But moving right along now, right? Something I'm going to gloss over real quick. Maybe not, because I do want to get to the charts. It says amid COVID-19, the U.S. Senate talks Bitcoin, Ethereum, stablecoins, and digital dollars. On June 30th, the U.S. Senate Banking Committee held a hearing that covered a whole host of policy topics on the digitization of money and payment. And what was described as a move closer to the U.S. digital dollar, pay attention now, that hearing also covered a broad swath of issues that impact the crypto and blockchain space. Chairman Mike Crapo, representative of Utah of the Senate Banking Committee, described how COVID-19 has forced Americans to go all digital at a rapid pace. Shout out to Pundi-X, XPOS systems with the contactless payment system. If you're not familiar, get in touch with Mr. D. Duncan. According to Crapo, whatever, his committee was keen to learn more about technology that could replace, our current payment system, right? Understand who the new players are i.e., you and me, the pioneers, and determine let me not go that way. Any regulatory policies, as well as what role the U.S. government should take in creating its own central bank digital currency. I've been saying that this is the direction that we were going to be moving in for a long time now. I don't know if people have been paying attention. What we got over here? They are advertising silver. I guarantee you a lot of it's not in stock though. But I've been talking about the paradigm shift from analog to digital for a couple of years. It took a while for people to jump on board and start understanding what I was speaking about. The interest has grown, which is evident in the amount of interest that is on, some of my social media sites, the amount of followers and whatnot, the analytics of it, the statistics of it. So I do see that the interest has grown, which I am happy for. You know what I mean? I love individuals that are interested in how things are forming and changing and shifting around them, especially from a monetary standpoint. For anybody that has talks any type of they get money type of rhetoric, you know what I mean? Nonetheless, nonetheless, it's real and it's happening. And the best thing you can do is get in the know, right? Get in the know so that when what you don't know or what others don't know happens, you won't be one of those ones that are caught off guard. You understand what I mean? But let's move over real quick into the charts. First thing we're going to start off with, we're going to be taking a look at the CME's Bitcoin chart. Let me get that pulled up. I think it is on, it's on KNC on default. Let me get over here to the Bitcoin charts. How's everybody doing out there? For those that are tuning in, those that may be new, those that may be old. I've been doing this show, for about 3 years now. I think about 3 years, something like that. And it's definitely picked up traction. I'm definitely happy for those that are tuning in with me. Let me see. You really can't see with that banner there. Let me take that off. You can't see the bottom chart. There we go. I want you to be able to see everything while we're doing this aspect of it. Brother Boy saying that was deep. What you talking about? The whole artist collateral thing? Yeah, everything is business. Everything is collateral. Always remember, you are the financial instrument. Coming over here and looking at Bitcoin CME charts. What do we have over here? Let's open this up real quick. 4 hour currently. Let's slide back to a daily. We'll make this kind of quick. Right now, for the most part, let me get rid of all this noise. Open this up. Just to look at it in a real easy way, utilizing the moving averages, you are slightly above some of the most major moving averages, coming down, retesting the 55 exponential moving average, bouncing from there. You know, testing above the 21, though not being able to close and hold as any type of support, breaking back down, retesting the 55 once again. And you can actually see where your strong resistance is coming in right now. It's damn near smack dab right on the 21-day exponential moving average. Now, what needs to happen out of Bitcoin? Once again, let me put this out there. This is not financial advice in any way, shape, or form. I do not want you to take it as such as entertainment. But what I need to see for Bitcoin to do in order to see continuation is number one, come break, open and close above 95.15. Then your next level to break, especially on the daily, will be about, I'm gonna say, 97.50 to $9,800. And then once we get back above that $9,500 area, that will take me out of the reversal feeling that I'm having right now, with us seeing continued if you see it lower, here we go, lower highs here, especially on the daily. So a break of that trend, would be a good that would be a good measure and a good indicator of continuation to the upside. So we would be looking for a move above this level right here. In fact, let me do that different. What we would be looking for continuation is for price action to start printing. Let me open this up. What do we want to go to? Price label. about right here. What's that, about 94.45? Then we open this up. There we go. So if we were to get rid of, and I'm gonna speed this up real quick because I do have to go. I'm gonna run through a couple of coins. Let me see what are we looking for. Let me go to settings. Let me get rid of these wicks real quick. Clean this up a little bit. Now, what we'll be looking for continuation, right, is for these red, for those that aren't familiar with candlesticks, for these red and green blocks, right, to start making themselves print above this $9,500 area. Then and only then can I see continuation to the upside. Until then, all I'm seeing is lower highs being printed, meaning that every time Bitcoin, let me see. In fact, you know what to make this easier for individuals to see? If I put this on a line chart, get rid of that, open this up, let's hide this momentarily. There we go. So if we use a line graph, right, with Bitcoin, we can see Bitcoin was down here trading around $6,800. It came up, this is a high, 93, broke back down about 8,600. It came up here, which made a higher high than the previous high, right? That's 10,000. Broke back down from there. About 85, came up, made a lower high than the previous high, broke down, higher high, broke down, lower high. In fact, this you could damn near look at as a head and shoulders possibly. You got left shoulder head, right shoulder here, dump, come down. Now you make a higher low than this previous low here, coming in at around 87, and then you come back up and you make a higher high, right? Now, since this higher high right here around beginning of June 2020, we've came down, we've come up, we've made a lower high. We've come down, we've come up, we made a lower high. We've come down, we've come up, we made a lower high. Now, we are seeing a change here as far as the direction of the lows go, because we had a low here, and now we came down, but we created a higher low. The next move you will want to see is to create a higher high once again above 9,500, and that's what you'd be looking for. So anything below, I'm gonna say 90. You got 9150 on the line chart, but I'm gonna say 9200, 9150. Anything below that, opening and closing, is a failure of the continuation to the upside, and I can see it's come back down to around the mid $8,000 area. Moving right along to Ethereum. Well, before we go on to Ethereum, also what you have playing out here. Now on the 4 hour, you do have the positive momentum, looking like it is slightly coming into play. So on a 4 hour chart, you can see it move to the upside, right? Remember, you have different time frames that you trade with. And actually, negative momentum is starting to get lost on the daily, meaning you are starting to lose that negative momentum on the MACD. We haven't had a crossover of the MACD and the signal line yet. Let me see, what is RSI telling us? RSI is moving to the downside. Let's see, what do we have? So we do have like a slow wedge to the downside on the RSI. We can use this as a indication or as sort of a bit of an edge to see if Bitcoin actually does reverse if it breaks out of this formation here. But on a daily, it is to the downside on the RSI for the most part. On a macro level, coming over here and looking at Ethereum. Ethereum, a bit of a different play. As we can see, we do have the fib levels pulled up. Let me open this back up to the chart. Candles, there we go. And also, let me put my wicks back on here. Oh, hold on. There we go. All right, so Ethereum now, which I think is going to outplay Bitcoin as far as percentage gains. Just my humble opinion, once again. You have a swing low to swing high fib, right? Pull. Now, with that fib pull, all you have is a 236 retracement. It never came back down and broke that 236, which comes in at, oh no, in fact, this is Bitcoin. Oh, okay, this is Bitcoin on spot price. This is outside of the CMEs. This is spot price Bitcoin coming in at 236. Spot price as well, holding the 236 at 8,878. We still have that 95, 30, 40 get past as far as the resistance levels. You utilize this usually when you get a run up. You usually look for anywhere between the 382 to the 618 retracement before you get continuation of the original trend. In this sense, though, if we come down and hit $6,000, I don't know if, depending on what's going on in the economy, can hold that bounce, and you may see a lower trend form out of Bitcoin. Right now, we are holding that 236 at 8,878. You can just go off that number there and use that as a catalyst for your support level. Anything below there, your next level of support is 7,900. Now moving on to Ethereum. There we go. Ethereum. That I've been looking at two different patterns here, which I'm looking for one or the other to break. So we have a horizontal channel and we have a sort of a flag formation, which if we break this formation here, if we can extend this here now, like so, our next level to hit, break, and open and close above will be $250. Right now, the majority of your support is being held above 238 bucks, around 238 and a quarter, give or take 238.50. Lower level of support comes in at around 225 bucks, below that 215. Below 215, you're looking at around really below $200. You're going to come down and retest previous support levels, coming in at around 195, 193. Now, if we were to use our moving averages, we can see that we did have a very nice bounce off the 55-day exponential on a daily, round up above the 21, and now found support above that 21-day moving average. So as I said, Ethereum does look a lot better than Bitcoin to me, though don't get fooled until you're able to break all of this pressure up here, right? So let's go ahead and take a look at it. Let's say if we had a pressure box, right, around this area right here, about right there. This is a pressure box. Until you get above here, Ethereum's not going to go any higher. Now, let's say that we have a demand box as well, right about here, right? Let's change the demand up. There we go. So anything below this threshold right here, Ethereum is in trouble. Anything above here, Ethereum's next level of something around 265. That'd be your next target area. Above that, 286. That's how I would play with Ethereum. Once again, this is not financial advice. Once again, I have absolutely no type of licenses, degrees, certifications, and anything that I'm showing you right now. 100% self-taught. So take what I say with a grain of salt, please. Let me see, after the Ethereum, what do we got left? Another ETH chart. Even on the fib levels, you can see ETH holding high above the 236, not grinding it out like Bitcoin, looking to come up and break that previous resistance. If so, you can see ETH do some things, in my opinion. XRP had a nice call here on XRP. You can actually see where our entry was labeled. Take profit was actually not premature, nicely targeted, came back down to actually retest to take profit as support, and then bounce from there. Ripple was in a serious downtrend for a while, but don't get it twisted. Don't let these little pumps out of Ripple fool you. They always do this. If we have to go back and we look at the monthly on Ripple and just keep it honest with ourselves, Ripple has seen consecutive lows since 2017. Ripple has never brought back, let me not say that. For holders, Ripple has brought back nothing but consecutive lows for the last 3 years running. So keep that in mind when everyone's telling you to buy Ripple. Hey, this is the next one to get. Keep that in mind. Let me see what time is it, 9:45. Yeah, with that being said, we got Litecoin. Litecoin looking just as sick on the monthly. So you could see a move up to about maybe 55, 60 bucks on Litecoin. Let's see. EOS. Let me see. Open EOS up a little more. There we go. If EOS can get past the 100-day exponential moving average, you may see a move up to around 288. Flash through this real quick. We got next after EOS. Link. Link performing well. I have nothing to say. In fact, see, this isn't the right chart. Where's that chart we was looking at, gentlemen? Those are the part of the Discord. Where's that chart we was looking at with Link? That may be on the X, another one. You got to pick your battle sometimes, you know? Hex was called out as a scam. I'm not saying that it ain't a scam. I am saying that money is being made off of it, and I do chart it, and it has broken out of a downsloping channel and been performing actually fairly well, in my opinion, as we can see here. But not what we're looking at. We came over here to look at Link. I do have some specific fib levels placed on it, if I'm not mistaken. I want to see what we came up to. Yeah, see, we exceeded everything. Nice. With that being said, family, I'm gonna go ahead and end this. I want to thank everybody that did get a chance to tune in with the Bitcoin Block Bully. If you can share this out, once again, go back, replay it for yourself, take notes, and be on the lookout. I'm gonna be coming live a lot more often, family. Make myself a lot more accessible. But that being said, the next one, the next podcast, to the next video is the Bitcoin Block Bully. Peace, power, and prosperity, family. I am out of here.